What's up, guys? Welcome back to another Market Monday. My name is Doc and welcome to my YouTube channel. How's your weeks going? 2020 has been like a gut punch. It's just so busy. It's just trying to get things together, trying to get a routine, and now we're trying to get into stocks. I didn't get into stocks until this year, and I noticed that a lot of people have other things going on. So to look at every stock and try to figure out which ones to invest in, and also do your own life with people doing teleworking, teleschool, tell people what to do. It's too much. But there is a great way to invest without having to do all this research, and I'm going to tell you that in today's video. Let's get into it. So as you can tell from the title, we're going to talk about ETFs, and it stands for Exchange Traded Funds. And basically it is taking a bunch of companies and putting it into one stock. So to back up a little bit, sometimes you have to do a lot of research to find out what individual stocks to invest in. So if you think about Blockbuster, for instance, 10, 15 years ago, you would think that was a great investment, and now it's not. So if you invest all your money into Blockbuster, now it's bankrupt and now you have no money. So what do you do to combat this? So Warren Buffett, or like other people say, the best way to invest when you don't know what to invest in is to diversify. And instead of picking a bunch of stocks, you can actually diversify by investing in one stock, whether that's a mutual fund, index fund, or ETF. And today I'm going to be talking more specifically about ETFs. So instead of taking all of your eggs and put them in one basket, you're able to put them in different places and hope for a great return. ETFs can span from different sectors. One specifically is JETS, which follows the airline industry. So it has stocks like Delta, American Airlines, United Airlines, Spirit Airlines, and several others. So it will actually follow the industry of airlines. So if you invested in JETS this year, then it probably wasn't a very good investment. So instead of investing in just one sector, you're able to invest in bigger companies and better diversify your investment. So the benchmark that a lot of people use as an investment tool and a baseline for their investments is the S&P 500, which tracks 500 of the largest publicly traded companies within America. So anytime anyone invests, they kind of look and see, is their investment beating this trend line? And according to nerdwallet.com, you actually get a 6% return each year by investing in the S&P 500. And unfortunately, not to my knowledge, you're not able to invest in the S&P 500 specifically, but you're able to invest in ETFs that actually follow the S&P 500. So stocks like VOO, VTI, and SPI all follow the S&P 500. So if you take your money and invest in these companies, you can kind of set it and forget it, and then your money will grow over time by following the US stock market. So basically you're hedging your money against how well the United States companies are doing. Now there are other ways and other places you can invest your money as well, but I definitely believe that a lot of people as a beginner should start investing in SPY. Now right now it is $333, but if you invest through a brokerage like Robinhood, you actually can do fractional shares and then just put in a certain amount of money a certain amount of time. So investing in SPY takes away all the guesswork. You're able to just put your money in there, set it and forget it, and as your financial friend. Believe it's a great investment because you don't have to do a lot of research. You can just put the money in. Now they do charge us very small expense fee for investing in it because it is an actively managed ETF and not necessarily passive. So look into that. You don't really have to do anything. It's automatically done. To be honest, I feel like investing is a very important part of just building wealth and being more financially independent. Now personally for me, I am a retail investor. I like looking up stocks and looking what's going on in the market. So if you were to ask me which stocks I actually look into, I actually like ARK-K, which is managed by Cathie Wood, and basically this ETF is really bullish on disruptive technology. So to name a few of the holdings, they have Square and Tesla. They're basically betting that the way we do business now is going to be different 10, 15 years from now. So things like credit cards will no longer be a thing. Gas powered cars will no longer be a thing. So when I invest in their company, they're taking my money and dispersing it across all these different companies who are working to change our future. So as y'all know, I am a Tesla fanboy. So the fact that she loves Tesla and she does all this different research, which makes me feel even more confident in the company, I definitely think you should look into that specific company that invests in some of the things that you enjoy. Definitely look it up on Google. I think that there are plenty of ETFs out there that just focus on certain sectors. I mean, fintech is a very popular one, which is financial technology, is basically changing the way that we transact money. So definitely do a Google research for sectors and ETFs that will help you find a company that you may actually like investing in. And if you don't get anything else from this video, I definitely appreciate you guys watching. Investing is a very important part of financial wealth and health. Please think about doing this. So whether that's just going through Robinhood or any other brokerage, I definitely encourage you to take that step. And if you want to take that right now, please think about signing up through Robinhood, which you can get 1 free stock by using my link down below, or get 2 free stocks from Webull when you deposit $100 or more. You can range from getting a free stock between $800 and $1,600. And also, if you want to go a step further and open up a Roth IRA account through M1 Finance, you can either open up a retirement account or you can open up a regular account. I personally use all 3 of these because I like to be able to diversify my money and learn more about investing. So I'm really just putting my money where my mouth is when it comes to investing and definitely learning. So if you enjoy this video, you enjoy all the research that I'm doing, please pay me in that sweet currency I call the like button. Comment down below. Let me know what you plan on investing in, or if you have any questions, I will definitely be in the comments, being more active. And lastly, remember, always do your own research. I am just a guy with a camera in a spare bedroom he now calls a YouTube studio. I may not be a financial advisor, but I am your financial friend. So with that being said, support the channel with a subscription. I will see you guys next week. Apologies for the late recording. I definitely recorded and didn't like the video. I definitely wanted to bring more value to this video. So thank you guys so much for watching. There'll be more videos coming out. Please support those as well. And I will see you guys next week. The cannons? Yeah. Let's cue them.